The following is an update and technical analysis on the USTECH100 NASDAQ Futures and the biggest component to the NASDAQ QQQ. And in my previous post, make sure you subscribe and hit the alert button, especially through my post segment, where 2 days ago I had announced that the USTECH100 NASDAQ Futures undercut the big 18,900 level that I harped and hyped about in my previous video titled The Dawn and Birth of a Bear Flag Continuation Pattern. And that level was taken out with conviction. That was first, we had the sell signal, which was 1 month ago, and where we had a multi-year upper concealed hidden price support level that was justified with a breakdown sell signal. And we had a clean divergent high with negative and bearish divergences that were intact. I issued this alert on March 3rd of 2025, where it broke down, had a double-digit crash, and then I reiterated that 2 weeks ago that there was a dawn of a bear flag, which was recorded 2 weeks ago on March 20th, 2025. Watch carefully for the 18,900 level to be taken out with conviction on an undercut, which would issue a ton of margin calls, just a big margin call level with forced liquidations, stops to go off. And here's the update, where we initially had a whipsaw-like reaction. You had a reactionary low, great defense by the bulls, and then you officially broke down. That was a validated undercut in which I issued that emergency alert in the post. Then we had that near major reactionary high. That is how you know that level was key. When you had it first, your reactionary low followed by a reactionary high, that was your cue as a breakdown sell signal secondary, and we just flushed right through the 236 bibs retracement like it wasn't even there, in a very powerful bearish move in motion, where this just isn't a correction but a signal of some of the fundamental capital revaluation. You had rising, where tariffs may have been the needle that pricked the bubble. You had rising long-term interest rates, which equaled higher discounting on future earnings, especially within the tech realm. You have malinvestment in speculative assets now being flushed here, and a liquidity withdrawal and fiscal constraint that is only intensifying. This is the hand of the market telling us of sound money reasserting itself. The fake boom fed by suppressed interest rates is reversing, where price is rediscovering its anchor, where you have the moving average convergence and relative strength index and the momentum oscillators all accelerating downward here, and a bearish crossover as well. And with the strength index around the 2368 handle, aggressively oversold, but still declining. Make no mistake, this close has officially entered the NASDAQ 100 into a full-blown bear market, 20% crash off its highs, deep into oversold territory, but not a bullish crossover at all, with strong oscillator downside divergence. Capital is just finally being asked to justify itself here, and these will be some great fib extensions for any short covering and long traders and or bull traders to step in price support level off the zero fibs retracement called the 16,977 handle. You have the 16,500 and the biggest line in the sand. I can't stress how big of a level this is. The 15,822 handle will be the biggest line in the sand with major multi-year price support and major reactionary highs and lows across that entire span of time. Call it a 2023 July reactionary highs followed by the November of 2023 market lows, where market pricing could reset 2 years into that inflection point, which will coincide with a close to 9.5% crash at the downside. And that's where I believe long traders, bull traders would need to aggressively defend that key inflection point really at all costs. And for any short sellers to cover and wait for an additional break, that will have massive confluence with QQQ, with a multi-decade ascending uptrend price support level that has held in throughout this entire span of time. That is roughly, call it a 9.5% move to the downside, 9.5% crash to the downside. And that would give a slight undercut of this price support level, only taking some stops to go off, shaking out some longs. And that's where you would want your price entry, around that key inflection point for a big counter trend snapback rally. where they eat out some shorts. You set some stops below, call it a 5% stop, take a 5% stop loss for a much larger big time rally to the upside. Again, I cannot stress how validated that level truly is in confluence of the 15,822 NASDAQ 100 price support level. It must hold its primary ascending multi-decade price support that began in 2008, because that line in the sand is more than just a technical level. It is the spine of the post-Great Financial Crisis bull era, the line in the sand between exponential innovation and systemic unraveling. If and when it fails, it's not just a break in price. It is a break in the market narrative. It's the market questioning the very foundation of 2 decades of monetary expansion, tech dominance, and investors' faith in the future. That line in the sand must hold, or watch the era it defined begin to dissolve.